Asian equities are broadly lower in response to the weak economic data from the US overnight and on concern of a deeper global slowdown. Investors are also lightening positions ahead of key events expected in the ECB press conference and employment data from the US later in the week. Additional pressure was seen after a weaker-than-expected GDP report from Australia and comments from a Bank of Japan policymaker. The dollar regained more ground against European majors but stays in familiar range so far, and thus, the current development doesn't warrant a reversal yet. We're still near-term bullish on euro, US dollar. Meanwhile, the Aussie extends its recent decline against other major currencies, and the outlook against the US dollar remains bearish. Australian GDP grew a mere 0.6% quarter-on-quarter in Q2, compared with an expected increase of 0.8% quarter-on-quarter. That's also less than half of Q1's 1.4% quarter-on-quarter growth. Year-over-year rate also slowed from 4.4% to 3.7%. Looking at the details, household consumption slowed significantly to 0.6% and fixed capital spending slowed to 1%. Though, that was partly offset by an increase in government consumption of 1.6%. Overall domestic demand growth slowed to 0.9%, much weaker than Q1's 2.1%. Export, though, returned to normal and grew 2.5% after a shocking 0.9% contraction in Q1. The data is in line with overall view that while still being robust, the Australian economy is going to slow further in the second half of 2012 and solidifies the view on more Reserve Bank rate cuts down the road. Bank of Japan board member Yuzo Mio said in a speech that there is an increasing risk that an overseas economic recovery will be delayed. Also, Mio warned that business sentiment has become cautious around the globe and the risk is increasing that the global economic slowdown will be prolonged. He said that US recovery seems to be slowing and Asian economies are slowing due to a drop in their exports to Europe. But he is optimistic that a Chinese recovery will help towards global economy's recovery. In Japan, the economy is moving towards a recovery, but worrying factors are increasing. He also pledged that the bank will push ahead with its powerful monetary easing by increasing its asset purchases, as already decided. Regarding yen, Mio noted that weak stock prices combined with the strong yen will hurt sentiment among businesses and households and restrict capital spending and private consumption and will weigh heavily on the economy. Investors were thrilled after the European Central Bank President Draghi's comments made before the European Parliament that the central bank would be comfortable to purchase bonds of up to 3 years maturity. Spanish and Italian bonds rallied, sending the yields lower, although the steepest declines occurred in the short ends of the curves. Italian 2-year bond yields dropped 26 base points to 2.37%, while 10-year bond yields slipped 10 base points to 5.67%. In Spain, 2-year bond yields plunged 44 base points to 3.07%, while 10-year yields fell 28 base points to 6.57%. Other European officials also indicated confidence over the outlook. For instance, French President Hollande stated that the EU Leaders' Summit on October 18 to 19 would find solutions for Greece and Spain. However, the idea of 3-year bond purchases was also criticized as a magic number. Firstly, there is no clear indication of what could be considered state financing, and so far, it's uncertain why shorter-term bonds won't break the treaty. Secondly, the ECB did purchase bonds with maturity of up to 10 years in its SMP before. Thirdly, there are risks that some governments would be tempted to significantly raise the amount of short-dated bonds and thus increase overall rollover risks. Much information is needed from Draghi in this week's press conference. Before that, the focus of today will be the Bank of Canada meeting. However, nothing new is expected from the central bank. The bank will likely leave the policy rate unchanged at 1%. In contrast with other major central banks, the Bank of Canada will probably continue to hint that monetary tightening, instead of easing, might follow should economic developments justify Swiss CPI, Eurozone PMI services and retail sales, UK PMI services, and US non-farm productivity will also be released. US dollar, Swiss franc daily outlook. The recovery from 0.9502 continues today and a further rise could be seen. But note again, with the 0.9635 resistance intact, means the near-term outlook remains bearish. That is, a fall from 0.9971 is expected to resume sooner or later. Below 0.9502 will target a 0.9420 key support level next. A break will have further bearish implications. Though, considering the bullish convergence condition in the moving average convergence divergence, a break of 0.9635 will indicate a short-term bottoming and bring a rebound back to the 0.9799 resistance level. In the bigger picture, a medium-term rebound from 0.7065 is viewed as a corrective move and could have just completed after hitting the 0.9916 resistance, a 61.8% retracement of 1.1730 to 0.7065 at 0.9948. A break of 0.9420 should confirm a reversal and should at least bring a decline to the 38.2% retracement of 0.7065 to 0.9971 at 0.8861. However, note again that sustaining trading above 0.9916 to 48 will start to argue that hold-down trend from 1.8305, the 2000 high, has completed and will bring a stronger rally through parity to the 61.8% projection of 0.7065 to 0.9594 from 0.8930 at 1.0493 instead.